Hello everyone. Today we will be discussing gold as well, right? So we'll be discussing gold, trying to get or understand where can we expect gold to go, and then future price movements. So what we have seen is that we have seen gold breaking above this previously formed highs, right, resulting in the market continue to rally and push a bit further to the upside, right? So breaking above the highs, right? So it broke above the resistance, push price to the upside. So remember that, like, whenever we start seeing these things, this is called something in the market we refer to as an extension, right? So upon the market breaking above a resistant level or a support level, what it normally does is that it overextends. So this, because, like, if we're looking at it from this perspective, right, on a monthly time frame, what actually occurred is that the market broke above the resistant level, the monthly resistant level. So by so doing, what it actually did is that it triggered the pending order. So you've got your buy stop, you've got your sell stop, you've got your buy limit, sell limit, you've got the pending orders that are residing, the stop losses as well. So by so triggering them, it actually generates liquidity within the market, because the pending orders, what they do is that they provide or they bring forth liquidity within the market. What we've actually seen occurring is that we've seen the market breaking above this resistance. Obviously, there are pending orders residing here, which are buy stops. There are stop losses that were located here, they go stopped out. So when you are a seller within the market, right? Let's say you are in the market and you are a seller, right? So whenever you get stopped out of your positions, remember that the stop loss that you have, what it does is that it provides liquidity because it's a pending order, right? So once your stop loss gets triggered, you automatically provide liquidity to buyers, right? So basically, you automatically do what? Become a buyer. By so doing, this is the reason why we start seeing price overextending, pushing price, gold extending, pushing price a bit further to the upside. So we have formed a new high, right? Again, if we formed a new high, for me right now, I'm currently looking for short positions and then to fill the tail that was recently formed. And then again, remember that you still have this tail here that has been formed and is yet to be filled. I will be looking for a potential push to the upside before I can start considering taking short positions, because, like, as a retail trader at this specific price level, this is not a good trading opportunity for short positions, right? The reason being is that, like, already the price of gold is already cheap as it is. So what I need to see occurring is that I need to see price pushing a bit further to the upside, making it expensive. Now brings the logic of buy high, sell, buy low, sell high, right? So for me to be able to sell something, I need to sell it at a valuable price. So I need to make sure that the price of it is high enough for me to benefit at the end, right? So that's the same principle that I normally apply when I start buying or selling within the market. So right now, I'll be looking for the gold to kind of like tap into the 2075 price level before I can consider taking any short positions, right? So now let's move to a weekly time frame. When we move to a weekly time frame, again, what we can see is that we can see that there's a lack of volatility within the market, right? There's a lack of volatility within the market. Why am I saying that there's a lack of volatility within the market? The reason why I'm saying that there's a lack of volatility within the market is because of the type of candlestick patterns that are currently forming. We're currently forming small bodied candlesticks. So the small bodied candlesticks shows me that right now, at where we currently are, we're currently residing within a liquid market, right? If we're currently residing within a liquid market, we cannot see volatility because we got a lot of participant buyers and sellers coming together and competing for price. They're all competing for price. Sellers want to push price down. Buyers want to push price up. So there's a competition of price, which results in the market ranging. So that's one thing that you have to understand. When you are in a highly liquid market, the market tends not to move, but yet it moves sideways. It does not make aggressive moves upwards or downwards. It just moves sideways, right? So this is one thing that I'm seeing, because, like, when you're looking at it, sellers want to push price to the downside to fill this tail, right? Buyers want to push price to the upside to retest the supply zone. So there's a competition of price, right? So now let's move on a daily time frame. So now when we move on a daily time frame, there are certain things that we start seeing right now. So when you move to a daily time frame, you kind of like see the structure of the market. Before even drawing anything, you can literally see that the candlesticks are getting smaller and smaller and smaller, and they are converging towards a single focal point, right? So they are converging towards a single focal point. So if they are converging towards a single point, now brings into the asymmetric triangle. So we've got something called an asymmetric triangle. An asymmetric triangle is regarded as a continuation pattern, right? So within this asymmetric triangle, right, what we're actually doing is that we are now converging towards a single focal point, right? Towards a single focal point. The single focal point is regarded as being an apex, right? So an apex is when the two parallel lines are coming, the tips of the lines are coming closer together, right? So this is one thing that we're looking at. We will be looking to take potential long positions on the gold, because this pattern is actually a continuation pattern, right? So if this is a continuation pattern, so basically, like when we're talking about an apex, it basically is something like that's related to mathematics. Basically, it shows you that like two lines, when they come in together or they are joining. So what we're saying is that we're seeing price converging towards a single focal point, whereby price is now getting congested. So whenever you start seeing price converging towards a single focal point or towards an apex, you can expect an explosive move out of that specific triangle, or a pennant, depending on which one you're looking at it, or which one you're looking at. So currently, right now, we're currently residing in this, right? So what I'll be expecting is that I'll be expecting the market to kind of like push to the upside before I can start considering a decline in the value of gold, right? So which in turn gives me puts me in a position where now I understand that retail traders want to push price to the downside. Everyone wants to push price to the downside, right? But again, this is very expensive, right? Or if you're looking at it in terms of a seller, this is very cheap, right? You cannot sell it at this particular price, because like right now, if you're selling it at this particular price, you're actually risking price. You're risking price pushing to the upside. So the push to the upside to retest the supply zone here. For retail traders, this will be too much. So it will be too much to push price to the upside. It will be too much. You cannot handle this push to the upside, right? So again, if that's the case, that means I will be looking for potential long positions in order to push price to the upside to retest the supply zone. With that being said, that means like now when it comes to the market, how I view it, I will start viewing it in terms of a thesis, an antithesis, and a synthesis, right? So an antithesis, basically what it does is that it presents or brings forth the problem within the market, the problem that we're currently facing. The problem that we're currently facing within the market is that the market lacks volatility. Again, the market is in the form of an apex, whereby the price is converging towards a single focal point, being congested. So that's the problem that we're currently facing, right? We're currently facing a problem whereby we are in a liquid market, whereby buyers and sellers are competing over price. What we need is that we need something that's going to entice retail traders, something that's going